Hi, this is Vijay Bambani here, and I'm recording this video to update you about a very critical and important development that's just occurred in our financial markets. Yesterday, we got the news update from the government of India saying that the inflation has edged higher to 6.93%. That's right, 6.93%. You're just a whisker away from 7%. And guess what? In the same breath, the RBI, which was offering bonds worth 18,000 crores, faced a problem in collecting the entire sum. 4,638 crores worth of bonds were not subscribed. This is called devolvement. So, what really happened? The problem is that these bonds were offering 5.77% return or yield at face value, of course. And your inflation is 6.93%. Now, here is a spectre that I have been warning you about for at least a year, if not longer. This is a challenging time for the fixed income investor, for any returns conscious investor, because your yields and your return on investment is likely to fall unless you cultivate what I call a 360-degree approach to investing and trading. This approach basically calls for watching everything that may potentially impact your return on investment. It does involve a great deal of equanimity. Equanimity is awareness of the market and synchronicity or harmony between the market and your actions. It involves a greater degree of awareness, a greater degree of hands-on involvement of the investor, but it can also be relegated by allowing somebody else who's knowledgeable about these matters to take care of these decisions for you, with you, and your behalf. So, what we basically do in the weekly cash alert service is practice equanimity. We basically try and be alert and aware to all the factors that might potentially impact our trade once the trade is initiated. And if at all, most of the factors, if not all, are not conducive to initiating the trade does not get initiated. Now, let me tell you what we managed to do using this ultra cautious approach, yet behaving like a hedge fund. I've mentioned this word hedge funds umpteen number of times in my videos. I will have no reservations in saying that I admire hedge funds, and heart of hearts, secretly, I do dream that my company will one day have a hedge fund trading division for our own money. And hedge funds are alpha boys who basically chase profits or returns irrespective of the market moods, market sentiments, or market directions. So what I basically did in the weekly cash alert service over the last 1 year, starting from August 2019, was to basically take extremely focused trades which had a very high probability of succeeding. There, remember, is no guarantee in trading about success. But the trade should have basically ensured three parameters. A, we tried to earn the highest amount of money possible with our investment in that trade. B, we tried to get in and get out in the shortest possible time so that no adverse geopolitical event could have come in and stepped in to impact our trade adversely. And C, the risk should have been at acceptable levels. I believe a great deal in the Jenkins Measure. A part of my investment decision or trading decision process is determined by my ingrown or in-house statistical models that I have developed myself. So I believe a great deal in the Jenkins Measure, which very basically says that every time a trader takes one additional unit of risk, he must endeavor to earn at least one additional unit of reward or profit, if not more. So we take additional risk only when the reward is higher, or we do not take it. There are a few times when my subscribers have asked me, hey, why did you get me out of this trade so fast? It actually moved in a little more in our direction, but that incremental came far more slower than the low-hanging fruit, which we simply plucked. And there are times when, believe me, we've got in and got out in a couple of hours flat. No overnight positions as far as I'm concerned and as far as I can help it. So even though your fixed income market might be letting you down, it's not the end of the road. With a little bit of effort, and remember, making money has never been easy. Only my wife thinks that making money is easy. I sit on a computer, type in a few buttons on the keyboard, and my life is a walk in the park. Believe me, trading profits are the most difficult, easy money you will ever make in your life. I'm not saying that it's easy, but that's what we do, just because it's not easy. That's why we are the weekly cash alert service. And the return, especially the accelerated returns that we basically focused on getting after August 2019, ensured that we wound up with almost 43%, to be precise 42.95% return in FY 2019-20. And in the ongoing year, we are at least 15% up in our trading profits in commodities. And this is without crude oil being available for trade because of the negative pricing imbroglio that occurred in April 2020. Once crude is back as a tradable commodity, we're going to be riding hard again. So, in spite of India being in a negative yield territory now officially, in spite of your fixed income markets dealing you a great deal of disappointment, there is still light at the end of the tunnel. I don't think you should be giving up hope just as yet. On that optimistic note, this is Vijay Bambani signing off for now. Till we meet again in my next video. If you're watching this video on YouTube, please don't forget to click like on this video and subscribe to my YouTube channel. In the comment section, do let me know what you think of this video and what you would want me to record in my next video. And help me reach out to fellow traders to spread the cult of knowledge-based investments and trading and my 360-degree approach to the markets. Do take very good care of yourself, your health, your family, your investments and trade. Have a very profitable day. Thank you for watching. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.